Today is Tuesday, the 22nd, and we had an update here for the market. It kind of did exactly what we wanted it to do and what we spoke about last night in the webinar. Hopefully, you were paying attention because what we were talking about were a few things. One, the 50-day moving average was going to begin to rise. That did occur here. Yesterday, it was at 73 cents. Today, it's at 86 cents. That 50-day moving average will continue to rise as long as we are above these prices right here each day. So, that 50-day moving average is going to start to move higher. It looks like we're in for a test of the 200-day moving average, and above that we have the anchored volume weighted average price from the all-time high up into this zone. We're in a seasonally bullish time of year. We have a pattern of near-term higher highs and higher lows. We're holding above the anchored VWAP from the low, so it seems as though this market should be able to continue to move higher. This morning we had what happened, what we spoke about exactly last night. We spoke at length about the gaps above the 5-day moving average over here and over here, and how each of those had led to an opportunity on the shorter term time frame to buy not on the dip, but on the breakout, but after the market regained the daily volume weighted average price. So not chasing this gap on the 2-minute time frame, but instead buying right here. I put a tweet out right there. I bought right here. I mean exactly. I did nothing different. And I put a tweet out right here that said, we're above the 5-day moving average. You buy here with a stop under here and raise your stop up. When it makes a new high, you raise your stop to there. When it makes this new high, you raise your stop to this low. When it makes this high, you raise your stop. When it makes this high, you raise your stop. When it makes this high, you raise your stop. It makes this high, you raise your stop. It's the same exact thing we do on any time frame. We're able to see it and talk about it in real time here, but the concepts are the same for every single time frame. We raise our stop up under the most recent relevant higher low when the market makes a new high for the time frame that we're involved in. Please write that down somewhere. Commit that to memory. I'll say it 100,000 more times before I die, but remember it, because I didn't make any specific recommendation by the SPY. But if you didn't read between the lines and understand that I meant buy it, then that's on you. Again, I'm not here to make recommendations. I'm not giving advice. I'm not telling you what to do. I'm saying here's the setup we talk about constantly, and how it's a successful strategy. And then as it breaks there, it's up to you to decide what to do. I'm not going to tell anyone what to do. That's not my goal. Put the pieces of the puzzle together. Start understanding the process. If you do that, you'll be able to repeat this on your own. You won't need for me to point it out to you. Instead, you'll be saying, hey, Brian, check this out. This stock gapped above this, and I bought it above the daily VWAP, had my stop below there, and had this huge trade. And it's a stock I might not have been looking at. And that's what I want for you guys. I don't want you to say, buy here, sell there. Okay, you're a dumbass. No, figure it out. Understand the process. We've got a funky print on the Qs there after market, but it doesn't mean anything. We're back above the 5-day moving average, and that's good. For the NASDAQ, I would expect that we're likely to do this before it continues to move higher. Here's the volume weighted average price anchor to that recent high. You can see we got through it here at the end of the day, but again, do you want to buy above that after it's gone from 280 to 286? I don't. I want to see it pull back, and I want to buy here. I don't want to buy extended markets. The Russell 2000 also, we look at the anchored VWAP from that day it made that high. It made it up through it. But yes, to me, that's extended. I want to see this. I want to buy here with a stop under there. The semiconductors had a good day as well. They broke that high, and they did so after a tight consolidation. You might have purchased right in here. What about that 5-day moving average declining? Well, okay, let's talk about that. Where were we 5 days ago? At the end of the day, this candle here, end of the day candle, was replaced with that candle. So the 5-day moving average is declining. What about tomorrow morning when we open up, let's say flat? We're going to be replacing this data. So guess what's going to happen to that 5-day moving average? The same thing that happened to the 50-day moving average on the open today. We're going to start to see that rise as long as we're above these levels. So if this market even pulls back like this, that 5-day moving average will rise and start to catch up to prices. So if you're not involved in the semis right around in here with a stop below there, well then tomorrow, If it pulls back and you get the opportunity, that seems like a good place to buy. I'm not going to tell you buy there. It's up to you. I would set a stop under here if I did that. The biotechs had a good day. They're still got that declining 5-day moving average, so same story. That's why I focused on the SPY today, because it had a better look overall. The biotechs are still, on that daily time frame doing what we wanted them to do, but they still have that declining 5-day moving average. If they can pull back and go, then that's good. The energy names had a continuation higher here after that shakeout. That was good for some of those names I mentioned last night. We'll talk about stocks in the next video, of course.